Hello and welcome to another episode of Merrill Talks, where we dive into the world of finance, investment, and the global economy. I'm your host, Yannick Pace, and today we're going to be taking a break from the tech and high growth world. And we're going to be looking towards Japan, a market which has traditionally been viewed as, well, the opposite of high growth. Before we start, a quick reminder that nothing in this discussion should be considered to be financial investment or professional advice, and that it is for information purposes only. So Japan's stock market is currently going through probably one of its best periods over the last 3 decades. Both its topics and Nikkei indices are trading at highs not seen since the 90s. They've registered double the gains registered by, for example, the S&P 500 and the Stock 600 this year. And we've also recently seen Warren Buffett make a high-profile trip to Japan. So with me, as always, is Merrill Fund Portfolio Manager Marc El-lazidi. Marc, Japanese stocks, are they finally back?
Hi, good afternoon, Yannick. What a question here. Yes, resurgence of the Japanese stock market is impressive, especially when you know the historical context, which was bubble and bust phase following by lost decade. And like you said, Warren Buffett went to Japan, and for any value investor, it's a strong sign here that resurgence, it's maybe not temporary, it's here to stay. When you know the age of Warren Buffett, 93, he has nothing to prove to anyone. He's a wise man, he's thinking long term, and he can perfectly illustrate a person who's segregating signal and the noise that we discussed previously to get value investment. So the question is, Japan, tactical or strategic bet? Before we start to answer these questions, I want to bring you a little bit of economic context here, especially when the event took place in the 20th centuries. Not far away, but it seems like far away. So let's start our journey in the 80s. Back at that time, Japan was on fire, an overheating economy, a significant increase of money supplied and credit. And as we could expect it at that time, it finished severely down, like every bubble, I should say. Bank of Japan drastically changed its monetary policy, going in the directions of interest hike.
Sounds a bit like like the situation we have now with the Fed and interest rate hikes.
Yes, correct. You are completely correct, Yannick. We are facing a similar situations with the Fed on these hiking cycles, but let's put aside these questions and maybe you and I, we can discuss with our audience in a certain webinar, because as we're discussing now, the Fed gave quite a hawkish signal, but the inflation is going down now at 4%, and don't forget the target, it's 3 to 2 for 2024. But let's back now to Japan and back to Japan and what happened during this craziness of the 80s. As you know, after the bubble bust, we call the following decade was a lost decade. Why? The stock market crashed by 60% from 1989 to 1982. The growth was slow. And I will say, following these out of control inflations of the 80s, the Japanese economy entered at that time into a deflations, even a deflation bubbles, which was quite scary. And also at that time, debt to GDP rocket high. The aging population became a significant concern with a very low natality. So Yannick, now you understand why I'm saying the context was not so going in the right direction for a resurgence.
And so what was the outcome of this on Japanese equities over the year?
I mean, as you know, Japanese equity are normally viewed as being slow growth, low profitability, low return, not attractive for most foreign investors, definitely. And also it's a question, also there is a corporate cultures view, it's viewed not like very shareholder friendly, I will say. So here we can imagine all the context is not so positive, I will say, but maybe this time it could be different. Why? I think Japan transformed into a certain, I would say, good directions with like better corporate governance, and going into the directions of the shareholder value. So it could, I will say, providing a certain opportunities for value investors. And it's not by chance that Warren Buffett went to Japan, because it could be a game changer here. And if we think the economy will revive, it could be clearly a bet that Warren Buffett is doing on the trading house. It could be a positive thing, and it could be a sustainable thing.
Before we go any further, when you say trading house, what do you mean? Because my impression is it isn't exactly maybe as certain trading firms might be in the West.
Yes. So in Japan, the definition of the sogo, sorry, my pronunciations, it's generally a trading company. This kind of company are involved in different various business sectors, especially import-export activities. They are big conglomerate with extremely diversified business line, which is quite different for the Korean conglomerate, as known as Chaebol. Why I'm saying this? Because a lot of investors here or the audience know the Korean one. Why it's different? Because the Korean one are often, I will say, family-owned business, and they are also invested on heavy industries, and they are not so much global. When the Japanese one have quite a well-diversified ownership, which is good, and they are not only focused on heavy industry. They are really on the retail, on the street brand, but we will discuss after that. So what I'm saying here, Warren Buffett announced that Berkshire Hathaway have been increasing on Ichou, Marubeni, Mitsubishi, Mitsui, and Sumitomo to 7.4. It took an initial bet in August 2020 for 5%. And if I'm allowed to quote Warren Buffett, he was saying the price are ridiculously low, and they are here to stay for the next 10 to 20 years. So again, a long-term potential here. Just want for the audience give you some experience here. Why? Because these names maybe don't ring any bell for you, but Ichou, if you have the chance, like me, to go to Japan in the past, Ichou owned Family Mart. Family Mart, it's a popular convenience store, quite an emblematic one on the Japanese street. And if, like every one of us, we like London, and you went to London, probably you know Paul Smith, this brand, and Ichou owned 33%, showing you that this kind of trading house are quite diversified in the retail in this case, but also quite international, which is quite different, like I say, compared to the Koreans. Like the most well-known is Samsung, who are more like electronic, heavy industry, not so much on the retail side. But now let's explore a little bit the chart and what's meaning for valuation. So here, just give you an idea about the topics. Topics is value, the P is value at 15.2. As you can see, there is like a massive distortions. Obviously, it was during the pandemic and a crazy jump. But normally, as you can see, on the last 10 years, the topics, it's 15.2. Let's put these things on the perspective with the S&P 500 and the US market. So definitely, we are quite higher on that side. Traditionally, for the past 10 years, it's always the case. Now, if we want to add the NASDAQ, add that, let's see. As you see, quite a craziness here. And we have the figures here showing you, like, clearly valuation is quite present here on the topics, that's for sure. One of the reasoning of Warren Buffett.
What is the reason these companies tend to have such a low valuation, despite the fact that they seem to be quite big companies with quite a far reach and quite well established?
I think it's more like the way they operate. I think also the bad reputations they get. I mean, as you know, Japan passed through a bubble and bust, and it was like a certain, when we say lost decades, but I will say decades with a S at the end. So people, especially foreign investors, are not really into Japanese stocks because they are full of cash. The return on equity is quite low normally, and it's not so attractive. But let's have a look on the price, and after we come back about the valuations. So since Warren Buffett took a position, which is in August 2020, you can see here the topics. Now you can see the S&P 500, and now with the Nasdaq. So no comparison here, as we see. Clearly, the topics and the S&P 500 are more similar. Of course, like we said, the Nasdaq, it's more a different animal because it's more on the tech side. We need to put in perspective the trajectory of the dollar yen, because here, this is the topics performance in Japanese yen. So you need to put these things in perspective. And you can see also that the yen was quite under pressure. As we know, there is a massive difference between the rate in US and in Japan, as we know, in favor like the interest rate hike, which took place and still maybe of the Fed, when the Japanese, they are still on the quantitative easing. Now, let's have something which is interesting, and after we will discuss why. This is the trajectory of the dividend for the topics and the Japanese 30 years. As you can see, there is quite a divergence here. And why I'm talking about the dividends? Because what Warren Buffett, when he picked, is these 5 companies. Let's have a look of the characteristic of these 5 companies. As we can see, quite normally a low PE, except I will say Marubeni, because recently picked up big time. But we have Mitsui 7.5, Mitsubishi 8.4, Sumitomo 6.7. If you remember the topics, it's around 15. Now on the dividend side, that's the good things here. We have a very decent dividend, knowing the rate, the 30 years rate in Japan, it's quite low. Now on the other side, the return on equity, as we said before, it was quite low, but I think Warren Buffett picked some companies who have a very decent return on equity here, and we can observe here.
And what about the trading companies? How have they been performing since Warren Buffett's trip?
Definitely, Yannick, it's the right question here. They're quite on fire. Let's have a look of this company. And we start with the first one. As you can see, an incredible Icho plus 39.5%. Let's see the next one, which is Sumitomo plus 40.7%. So we are, and here, 35.5 Mitsui. And Mitsubishi 61.2, and Marubeni 61.9. That's why also you see that the PE was going quite above 10, which we're talking about companies who historically have a PE of, I will say, below 10, and we are not talking about tech company here. So that's why it's quite impressive, I will say, in terms of performance, because you say, yes, the Nasdaq, it's plus 40% on a year to date. Yes, fair enough. It's a tech company, but here we're talking about trading house with a PE technically always below 10, except Marubeni, because Marubeni went really on fire, and that's why it has a PE above that. But Marubeni, 61% on a year to date. I mean, if it's not a resurgence, how you can call it, definitely.
Yeah, I mean, there's very little denying that it's a pretty strong run. I suppose the question becomes, how long will it persist? I suppose it needs to last a while for us to really be able to say it's a market revival, right?
Definitely. I mean, we're expecting more corporate reforms, definitely more attention to the world. Also, it's important also, maybe inflation is picking up there in Japan. Why I'm saying this, because people tend to invest more in the stocks when inflation is quite high. And as you remember, for decades, the Japanese economy was in deflations, which is deflation, which is quite a scary term. Why? Because it's destructions of value. So clearly we are going in these directions. And I think Warren Buffett's belief also of the recovery of the Japanese economy, and probably think it's not the end. We see some peak also on the wages here, which is a very good positive sign. So I think I will say the factors are going in the right direction, tending to say this revival, it's here to stay.
And what about the fact that Japan has such an aging population? Do you think that is something that could play a role in its development over the next couple of years and perhaps on the markets? And could AI be a game changer in this respect?
Yes, I mean, I know your favorite topic, Yannick, AI and robots. Of course, I think because of several factors, cultural factors, religious factors also, because they are Buddhists there, I think they feel not so reluctant to be manipulated by robot. Why I'm saying? Because the aging populations in Japan are going in the right directions of AI and robots. They don't have any restrictions because they are quite scared to be touched by foreigners. That's the reality. Immigration, it's an issue in Japan. It's an island. I mean, and what they project by 2050, half of the population will vanish. What I'm saying here, we are around 120 million Japanese, and they project by 2050, as we know, it could be like 60 million. So definitely there is a problem here. Just to give you an idea, for example, the average age of a farmer in Japan is 65. So yes, they are facing this problem. And I think AI definitely can help on that side, and especially robot. They're already using robot quite in an intensive way, because if in the nursery home they prefer to be touched by a robot than by someone who's non-Japanese, and this is really the reality. So I will say they are going in the right direction. If you remember on the last webinar, we say who are the eligible countries to be the super countries who will dominate the semiconductors. If you remember, we have China, we have US, Korea, and Japan. So clearly they are going in these directions. Fujitsu, who, if you remember, was a photocopier, now is more on the semiconductors, also going into the healthcare. And definitely there is a lot of other companies in Japan who are offering very interesting future, I will say, outside of the trading house, because Warren Buffett is not on the growth side, as we say. He's more like, okay, low PE side, below 10 normally. But I think even on the growth side, there is like a lot of interesting company, especially on the tech side, because they are facing the aging populations like we are facing here in Europe.
And what parallels do you see? What parallels or differences really do you see between Japan and similar economies? Say, for example, the German one. You know, in a sense, both came out on the losing side of the war, but they integrated well into the global economy by becoming engineering nations, let's say. Any thoughts about that?
Yes, definitely. Thank you, Yannick. I mean, you know, it's a topic I like to speak about. I mean, definitely Germany, it's an engineer nations. Japan, it's an engineer nations. The fact is, like, they really going into technology, and this is the issue of Germany, who lost the track here. I mean, we can make even a parallel why the Soviet Union lost also the tech in the 80s. I mean, I will say the German economy is really looking for technology and looking to finance technology, but they don't have, like, I will say, an ecosystem, when in Japan you have like a quite consistent ecosystem. Like I say, Fujitsu is an example, but there is many other companies in this kind of business, I will say. When in Germany, I will say, following the Second World War, be focused on chemicals, automobiles, they had issue to really create technology here. And clearly here it's a problem. When Japan, as we say, this super semiconductor race, some country will win, some will lose. And definitely, as you know, when we discussed last time, Europe tried to finance things in the 80s. We remember there was at that time Thomson and Marconi creating ST Microelectronic. We have Infineon, a spin-off of Siemens. But here, where we stand, where they stand, it's a question. When the Japanese company, they are already quite on the top of the list, like the Korean one. I mean, we know Samsung also. But that's why I'm saying I've seen more positive vibes here, if I say positive vibes, in Japan, Korea. And like I said, Germany is little bit have a problem to reorient its economy going more into the tech.
Yeah, it feels like the fact that Japan made early moves into the kind of the microelectronic sector in the 80s and even before has pretty much ensured that it kind of remains till this day one of the most high-tech economies, and in a sense a sleeping giant. That if you it has the foundations there and the basis for a resurgence. I suppose we just have to wait and see whether that pans out, because as we said, on the one hand, we've been here before, and as we said, Japan is notoriously a slow growth market, and one with a business culture that doesn't really necessarily favor investors, especially foreign ones. Now, whether or not this will change remains to be seen, but it does look like the interests of many different stakeholders, from the business to government, have aligned such that Japan looks to pursue quite an ambitious new strategy. As you said, we mentioned last week how the Japanese government has put together a consortium to pursue semiconductor development and rival Taiwan's TSMC. So it looks like this sleeping giant kind of might be ready to wake up. So I guess I see the signs we've seen so far are good. But we'll have to, I suppose, wait a bit more to see whether this rally has staying power. And so with that, we've come to the end of this episode. Thank you very much for following, and goodbye.